For more on the Eurozone debt crisis, I'm joined by Ismail Erturk. He's senior lecturer in banking at Manchester Business School. He happens to be in our Hong Kong studios at the moment. Good to see you, Ismail. I wonder, does it end with Portugal? Is the worst of the European debt crisis behind us now?
I don't think so. And I think also it is very important to identify where the problem lies. It's not bailing out Portugal. This is bailing out French and German banks who lent to Portuguese government. Similarly, Greece is bailing out French and German banks who lent to a Greek government. So I think we need to look at the European problem in a broader context. And European Central Bank, too, is holding huge sums of bonds issued by Portugal, Greece, Irish government as collateral. So this is a systemic, what I would call European banks' subprime crisis.
So how do you deal with it?
Well, I think the Europe needs to look at the whole issue and reform the bond markets. We need longer maturities of bonds issued by all problem countries. Even the UK has a big deficit and needs to finance that deficit in the longer term. So we need to look at how these deficits will be financed, and we need to bring in pension funds who can lend in longer maturities than the banks who are in trouble.
What do you think about Schäuble's comments that Greece may need a cut in the interest rate that it's paying for its bailout, another one, and perhaps a longer time to repay its debt? It strikes me that Ireland may as well wait a few years, and the EU will renegotiate with them as well.
I think they just, I think they're not looking at the problem at a fundamental level. Just like in your news, the German finance minister has a different view than European Central Bank Governor Trichet. So I think Europe is living dark ages in finance. We need a renaissance in finance. We need to look at the whole financial structure in Europe more closely. So, I mean, if you look at, for example, previous sovereign debt problems, Argentina defaulted on its bonds, and it was $100 billion back in 2002, and then the financial system did not collapse. So I think it is not an issue of how much interest you pay. I think it's the issue of how you restructure the debts, and then how you make countries like Greece, Portugal, Ireland more competitive. Anyone who's been to Athens, Lisbon, Dublin 10 years ago, especially Athens and Lisbon, you could see that those countries had fundamental economic problems.
When we look at the UK Banking Commission on Banking that's coming out today, looking at either splitting up the banks or perhaps something less than that, what do you think is the solution here?
Well, I believe the current banking business models, conglomerate business model, doesn't serve the economy anywhere in the world, including the UK. So I think they should be split up, but in an orderly manner, in a more organized manner. And the splitting should be done where the prop trading from investment banking arms should be separated, rather than investment banks from the retail banking. So I seriously think that the current conglomerate business models don't work, and there's huge forms of subsidy. If you look at a bank like Barclays, they have retail arm and the investment banking arm, and then clearly the retail arm helps investment banking arm, and then Royal Bank of Scotland has a different kind of structure. I think we need to look at banking in the UK and then look at what kind of business models in banking can serve the economy better.
Ismail Erturk, Manchester Business School senior lecturer in banking, thanks very much for joining us.